Hello, this is Adam Williams. It is about 7 o'clock in the morning on Tuesday, March 31st, 2020. And at about 10 o'clock last night, the SBA finally issued the application for business owners to apply for an economic injury disaster loan. I'm realizing that there's a lot of confusion about this loan as well as the payroll protection loan that were part of the stimulus packages that came out as a result of this COVID-19 crisis. So I wanted to try to explain the difference between the two and maybe how you should approach this. I'm not going to get into the laws or the history. I'm just going to tell you about the two different programs so that you understand what they're for. The economic injury disaster loan used to be for disasters, if your building burnt down or got struck by lightning or was flooded, but now it includes this COVID-19 crisis. And it allows you to apply for a very low interest loan for your business if you've lost revenue or been affected by this, which just about every business has. You can apply for $25,000 unsecured with no personal guarantee, and then the limits go up pretty significantly from that into the millions of dollars. The SBA decides how much you're going to get out of this program. You can't apply for a specific number. But the crazy thing about this is you can request, because of the changes to the law, a $10,000 advance on this loan, which will be put in your bank account within 3 days of being approved. And this advance does not have to be repaid. It's basically a grant. It's basically free money. So this is a way to inject some cash into your business right now. Now, the important thing is the SBA administers this program, and you can only spend that money on certain things. So you need to be very careful about how you account for those funds. The second program is the Payroll Protection Program. As of the moment I'm recording this, the application for this program doesn't exist yet. It's similar to the 7A program through the SBA, but it's an expansion of that. This program will actually be administered through your bank. You're going to apply through your bank, and you are going to need a ton of information to apply for this loan. Whereas with the EIDL, that's something that we can actually help you with. With the payroll protection loan, the amount you can borrow, as an oversimplification, is 2.5 times your average monthly payroll. But that payroll includes what you pay yourself as the owner through wages and distributions, what you pay contractors. So there's a lot of things that can be thrown into the definition of payroll. So you can borrow 2.5 times that. And here's the crazy thing about the payroll protection loan. The amount that you spend in the first 8 weeks on rent, utilities, payroll, mortgage gets forgiven. So again, this is free money potentially. There's limitations, obviously, on how you can use these funds. You need to be very careful with what you do. You need to be very careful with the way that you apply for the forgiveness when the time comes. But like I said, you'll apply for the loan through your bank. We can help you assemble the information for that and make sure that your corporate documents are in order. And then when it's time to request the forgiveness, we can help with that as well. So those are the two main programs that we're dealing with right now. There's other benefits. There's tax credits and things like that, which you need to be aware of. Right now, the hot topics are those two loans. You can reach out to us if you need extra help. We are scheduling time both with team members and attorneys in our office to help with this. I look forward to hearing from you.